Today we have a rather complex market. Currency pairs are very volatile due to the continuous release of major news throughout the day, and significant traders are active all the time. This means I'll skip this currency pair because the potential profit doesn't justify the risk. Prior to this, market makers also removed liquidity from a local minimum, after which the price reversed and started moving upwards. Hey guys, it's me, Mary, your personal trader. Today I'm going to show you how I conduct my trading sessions, so watch, enjoy, subscribe, and join in. Join to my Telegram channel where I conduct live sessions with subscribers and provide accurate results. The link is in the description, and you can also subscribe to my YouTube channel where I publish new videos almost every day. Let's start the trading session. First, a general market overview. Today we have a rather complex market. Currency pairs are very volatile due to the continuous release of major news throughout the day, and significant traders are active all the time. I'll be opening trades with an expiration time of just 3 minutes to mitigate the volatility. I'll be analyzing charts in a 1-minute time frame while also checking global trends on a 5-minute time frame. So the first currency pair, Canadian dollar to Swiss franc. There's been a liquidity removal from the lower end, so theoretically we could enter for an increase. However, I won't be entering because the payout percentage is only 28%. This means I'll skip this currency pair because the potential profit doesn't justify the risk. Next, Swiss franc to Japanese yen. Here again, there's been a liquidity removal above the local maximum, and the price briefly renewed it by a few pips. Prior to this, market makers also removed liquidity from a local minimum, after which the price reversed and started moving upwards. The market is moving fairly predictably now, but I want to look for reversal patterns. Here, a few minutes before reaching the top target, a pin bar for selling has formed on the chart. This is one more confirmation that the reversal might happen soon, and the price will start falling. Additionally, the price couldn't hold above the level where liquidity was removed by market makers. So I'm opening a $100 trade for a decrease with a 3-minute expiration. I expect this was a simple liquidity removal and stop loss triggering for retail traders, and the price will now move down so that market makers can close their short positions there. In principle, this has already started to happen. The makers are pushing the price down, and I timed the decrease trade very well. Let's wait for the results now. The trade's expiration time is coming to an end, and as you can see, the trade closed successfully, and I'm locked in a net profit of $90. It was a straightforward trade. The price dropped almost immediately and never approached my entry level again. And now I continue to analyze other trading pairs. The market is such that all you need to do is identify a favorable entry situation, and then the volatility itself will bring in profits. Such opportunities are quite rare, so you need to take full advantage of them, maximizing their profit potential. So here is the euro to Canadian dollar pair. Looks quite interesting, especially that long wick on the red candle. This is how the market makers offset an imbalance from that strong downward impulse. But unfortunately, there are no entry signals here, no hints about the price direction. The next pair is Australian dollar to Canadian dollar. I need to scroll the chart back, since the levels and zones aren't visible right now. There we go, now it's becoming clearer. The long red candle is an obvious imbalance that the market will try to fill. Well, perhaps it's already been filled, we just need to draw the rectangle to the end. Okay, the imbalance has been filled. The price hasn't tested this zone yet, it's just been bouncing off it. It's quite interesting. Bears pushed back bulls twice while exerting significant downward pressure on the price, but Bulls are finally gathering strength. In the last few minutes, the price broke through this zone with a sharp, impulsive movement. Not just broke through, but also established itself above the imbalance zone. I'll enter here for an increase with a 3-minute expiry and $100. I believe the price will only continue to rise from here and won't drop below for more than a minute. The resistance turned support imbalance zone is confirmed by the recent candles. I think there will be a continuation following this strong impulse because the bulls should have enough strength for that. Let's wait for completion. Well, the trade will likely close in a loss since the bulls ran out of steam. Yes, the trade closed in a loss. It's alright, I'll offset the loss of a $200 trade. In the previous trade, I missed profit by just a couple of seconds. However, the previous analysis still holds because the support zone held and the price didn't break through it. Since the analysis is still relevant, I'll use this opportunity to try to make profit again. This time should work well as the price reacted promptly from the zone. Now let's wait for completion. Only 5 seconds remain until the trade's completion, and it's evident that I'll make a profit. The price simply won't have time to drop. Yes, there it is. My profit of $378. Out of this, $200 is the trade amount, $100 is the loss offset, and the net profit is $78. All in all, not bad at all. Considering there was no need for additional analysis, let's move on. The next currency pair is the British pound to Japanese yen. Here we see an interesting situation similar to what we had on Australian and Canadian dollar as the price approached a mirror level. A mirror level is a support or resistance level that the price previously broke through, then returned to it from the opposite side. This resistance level was broken upwards, which means it has now become a support level. I'm confident in this because the price has bounced off it multiple times. Moreover, the price renewed the last low by a few pips. I think the market makers simply removed liquidity below this low, and on the lower time frame, it's evident the price received a reaction from the mirror support level. And as if these two factors weren't enough, a pin bar reversal pattern formed right at the support level. This consists of two candles with long wicks that ended at the same level. A rather powerful reversal pattern. So we're switching to pocket option and entering a trade for an increase with a 3-minute expiry. I believe a reversal is imminent now, and I've entered right at the beginning of the movement. Let's wait for the completion. There are 5 seconds left until the trade's completion. Unfortunately, it will close in a loss. The price broke through the support levels, but I'll fix this with an offset trade. According to martingale method, I'll simply open another trade twice the size, but this time I'll open it for a decrease. My analysis wasn't entirely accurate, and the price did break through the support zone. Now I expect the support zone to turn into a resistance zone, and the price will head lower. This level is a mirror one and has changed several times in the past. It was initially a resistance zone, then became a support zone. Now it has probably turned into a resistance zone again, so I expect the price to rebound and move downwards. Let's wait for the trade to finish. Well, The trade closed in profit literally in the last second. The price was above the entry level for most of the trade duration, but luckily, there was a pullback towards the end, which earned me a profit. I think this was a fake ascending trend, and now the price will continue to move downwards, as it should, but profit is profit. I've offset the loss from the previous trade, and I entered a bit on top, earned a bit on top. Now, let's look for other potential situations for profitable trades. Okay, what do we see on the chart? British pound to Australian dollar. The price reached the support zone that it once rebounded from. Support was formed by a pin bar reversal pattern, but such a signal isn't powerful enough for me to enter the trade immediately. There is a possibility that the price might break the support and go lower. Let's look at other currency pairs. For now, I don't see anything interesting in the market. Australian dollar to Japanese yen, nothing interesting here. Australian dollar to Swiss franc, also nothing interesting. British pound to Canadian dollar. The price is convergent, but there are no clear entry signals. Let's check other pairs. There must be something interesting. US dollar to Swiss franc, again, no reversal patterns, nothing formed except an attempt to gather liquidity for a downward move. But on the US dollar to Canadian dollar currency pair, something suitable for entering a trade might be forming now. I need to switch to the 1 minute time frame. Here, it's visible that the market makers removed liquidity from the local peak. The price only slightly renewed that peak. Before this, the price approached this level but received a reaction from it. Then the market makers raised the price slightly above, probably triggering a few stop orders and obtaining their liquidity. During this time, a bearish pin bar formed on the chart, a reliable reversal pattern. I expect a drop. The price has already reached its upper target, but the lower candle's body didn't establish itself above the local peak level. Moreover, a pin bar has formed. I expect the price to move towards the lower targets now, which means I should enter for a decrease. While the trade is open, let's wait for completion. So there are 15 seconds left until the trade's completion, but it's clear that the price isn't moving in the direction I need. I need to make a decision, offset this trade or look for another opportunity. Let's see what's happening on the chart on TradingView. Here, it's visible that on higher time frames, the price has established itself above the resistance level. Let's continue. On lower time frames, it's also evident that the price has established itself. In general, the resistance zone has been broken through. Consequently, the technical analysis is invalidated, and I no longer consider re-entering for a decrease, since the price has already established itself and is unlikely to drop. But if it won't drop, it means it will rise. Is it worth entering for an increase? No, it's not worth it, because the price has already risen significantly, so for a confident entry for an increase, I need to wait for a correction. Well, here's the correction. I can enter for an increase. The price has reached precisely the level of where it previously broke through. I entered with $200 to offset losses, and now we can wait for completion. The expiry time has come to an end, and I confidently made a profit with the offsetting trade. For today, I've earned around $300, 25% of the deposit. I risked only 8% of the deposit in the trade, so the final result is quite good. I'm closing this session with 4 profitable trades. I appreciate your focus. Witnessing your subscriptions, likes, and comments brings me immense delight. Your engagement fills me with happiness and satisfaction. If you're interested in having me as your personal trader, please click the link provided in the description to my Telegram channel. I'm looking forward to our next interaction. Goodbye.